I hope everyone's doing well and welcome back to another weekly outlook. So cool. Quite a few things to touch on today, right? We're going to be building on from that swing trading lesson that we've, released earlier in the week. And you'll get a bit more of an insight into like how to actually approach it. There's a few ways to go about it. Now, the first thing that I'll start off with, right, is the idea of, again, it comes down to pairs, right? I don't think swing trading is necessarily hard, but it can be a bit confusing if you're not picking the right pairs, if you're not getting into the right markets. That's where it can play with your emotions, make things a bit long-winded, and, it can lead to other sort of consequences. So the first thing that I'd like to, sort of touch on is we've always traded EU, GU, DXY as a sort of, trinity, let's say. And within these, what this means is that you're sort of very tapped into the pair. We watch the price action every week. It's coming from here. We expect it to go there, blah, blah, blah. These sort of very basic premises, right? Because of that, you can be a lot more confident hitting a swing. For example, right, just the fact that we've sort of stalked price action on DXY and we know that, oh yeah, this is a daily OTE and now we're hitting a short from a daily premium, right? Bear in mind, sorry, I know I just realized that a lot of you guys watching are not in the private mentorship. This is essentially a setup. We were taking the private mentorship. I'm going to expand more into this as well, but essentially shorting from a daily premium and then understanding that, we're seeing DXY in a bearish context and we want it to go lower from here. Makes a lot more sense, right? It makes a lot of sense for us to, sort of take the shorts here and watch price action deliver lower, right? That's in line with our expectation. That makes things easy. But sometimes, right, we also understand that EU, GU aren't the cleanest markets and other markets are moving. That's why in the lesson we mentioned, when we come to the economic calendar, we can start having a look at, okay, what else has a lot of red folders? Now, we already, right, the first thing that catches my eye is that we have EU, GU, or rather Euro, Pound, red folders clustered on the Thursday. Got CAD red folders here, more CAD red folders here, and some Australian dollar ones. But from the looks of it, I would lean towards looking at, the Canadian dollar. So now imagine, right, again, like I said, I would only really trade majors. And for that, we'd like to see a good trend of the DXY. Now, I would like to, hold my bias. I remain bearish on the DXY. So what I can say is, okay, I think, the Canadian dollar will make a move this week, right? So if that's going to make a move this week, what can we go look for? We can go look for, I believe you can pick currencies, yeah. Go look for the Canadian dollar futures, which is this, right? And we can think to ourselves, okay, if I'm bearish on the DXY and I want to catch a swing, I want this to be going in the opposite direction, right? I want this to be going higher, meaning that, put together, we'd be looking at a trade on USD CAD and we'd ideally like this to look bullish and the dollar to come bearish. And from the looks of it, right, and again, you see with these things, these small steps, these are things you get quicker, faster at the more you do them, right? Even if you sort of, let's say, pretend do them, meaning that you may just paper trade this and have this idea in your head because you're not a swing trader, so now you just want to practice. You can mark out these pairs, think, okay, I think this pair is going to move this way. This is how I can potentially frame it. We look on the monthly, there's nothing really interesting. We took previous monthly high, came down lower. Coming a weekly, it does look like it's a bit of a retracement, right? Coming a daily, it starts looking a little bit better, where we've got an accumulation, we've got to move down back into the range. So perhaps a move higher is favorable. And then we look at this and we see we've got consolidation, move down, another consolidation. So for me to consider something here, maybe a sweep lower on this, right, taking previous weekly low could set up the move back to the highs. Right, now that's something to consider, considering that's the sort of thing we want to see. Then we can take a quick look at USD CAD. Look at the weekly candle and we start seeing, what can we favor? Perhaps a move higher here is warranted. I know we've hit this weekly fair value up, we've traded away a bit, but there's quite a large range for price. That's the first thing that I see, right? And there's a good likelihood in this large range for price could start making its way up here, right, towards the equilibrium. So perhaps there'll be an opportunity offered to go long, and then we can come down, slightly lower, come on a lower time frame. See, is there any sort of good range for us to use? Is there a good opportunity to long from? Here, there's nothing amazing. So how would I approach something like this during the week? Maybe we'd watch very intently, say, on the daily chart. If we get something like a previous daily low sweep, then a strong move higher, we can consider it. Or very simply put, you know, we have CAD folders coming up on the Tuesday, which is the Canadian CPI. You could let that pass and let that set the tone. Maybe you'd be able to get the big shorts from it if you think it's going to go short, long, whichever way it is. This is just giving you guys an example. This is something I'd potentially be looking at during the week. But if I'm being very honest, you know, the USD CAD and CAD as a whole doesn't look very solid to me, despite having a lot of red folders this week. Maybe it'll become clear during the week and you'll have more red folders left over towards the latter end of the week and you can consider something. But right now, to start the week off, it's nothing crazy. And I'm very certain if you take a quick look at AUD USD as well, it has a couple of red folders, it won't be amazing. Doesn't look amazing at all. Weekly, daily, just very choppy, very sideways. Maybe if we were sitting somewhere deep in this range here to go long again, then we could consider it. But for the time being, nothing. Anyways, back to the DXY. Right, what are we looking at? What do we want to see? Now let's start on this weekly chart. We've got a nice weekly candle in the premium. I'll delete this for a sec. Nice wick, move away. From this type of candle, I would favor the move away, right? Specifically because this candle is coming from the premium. We look on the daily, we've put in a nice swing, big move away, and now it's starting to get a bit choppy. I'm down to a 4 hour and I personally like what I'm seeing. So with the group, the mentorship group in specific, you know, it was a concern of whether do we hold this trade over the weekend or do we not? So we ended up holding it, right? And the idea was that I said to everybody, look guys, based on the daily close, we might be able to reposition, get a better entry. That better entry would have been above this accumulation, in my opinion. Price has now hit that and is now, you know, I would say ready for a sort of power of three. But this would assume that we're putting in a high of the week super early. Now the thing is, our stop loss, right, is at the previous weekly high. I do not expect the previous weekly high to go in this bearish context, right? Can it go? Of course. That's the same with any trade. Any trade can go hit your stop loss, right? It doesn't matter how certain you are. But in this context, I really and truly don't expect it. We may possibly see something like a previous daily high sweep, a sweep here, but I still wouldn't expect price to reach this, right? If now the following day, or rather, sorry, the Monday comes and we trade very strongly up here somewhere, and I'm sitting at about 0.5% loss or something, I may consider closing. If that Monday candle closes very, very strong and it looks like, you know, if I came to this chart fresh and it was Tuesday and I had to bet which way Tuesday's candle is going to go and it looks like it's seeking this buy side, then why not leave the trade and we'll reposition? Either way, you can reposition. If price comes and takes the high and then turns bearish, you can take the shorts. If it doesn't take the high and you ended up closing earlier and then it displaces lower, you can still re-enter, right? But at the time, would that be a wise decision? Yes, depending on the daily closes, it may be a wise decision, right? So that's what we're watching. On the DXY, very simply put, we've crossed that mid-month mark. I would like to hope that this is a mid-month reversal, the DXY, and the rest of the monthly candle will be trading lower. If you take a quick look at the monthly, we've pretty much opened and only moved up. And based on the previous candle, we actually wanted to see a move lower. So I'd like to see this candle now turn around and start heading towards this previous monthly low, right? If we take a quick look at the bond yields, they support this. So now we know they've been very choppy, but quite similar to DXY, we've had a bit of a wiki close. Now, this doesn't really mean much to me. I know there's a bit of liquidity being engineered, you know, building some sort of trend line here. And what this could mean is that price moves away low. I'm very flat on the bond yields. I don't really have a bias. If we do look at the 4 hour though, I do think this is the market maker sell model ready to possibly, you know, come into play and head into this discount. But it's uncertain whether price wants to run a bit higher, take this buy side, or if it wants to leave these highs engineered and just head lower for now. So what I'd be watching for on the bond yields, which may really help the DXY get that push lower, is if we can break lower here, continued, then it's likely this whole market maker sell model will unfold and really set the DXY up for a nice move down. That's what I'd expect the coming week. And when we're on these sort of higher time frame swings, I think it's important to try and be on side on, you know, your relative pairs as well. Are we in the right pair of EU and GU? Now, for me, this is the sort of last hold point for EU. We do have some news folders coming up this week, but this is the last sort of, I'd say, significant discount array that I'd be watching this order block. Currently in this, if we can get a previous weekly low sweep and move higher, it will be great. Otherwise, if we don't, then, you know, come out on a monthly, it really looks like price just wants to head lower, especially based off the last monthly candle where we have a large wick, quite a strong move away now, and it may, you know, head back for these lows. Coming a weekly, like I said, not exactly amazing for us considering we are in EU longs, and from here it doesn't great. But if I was to expect a reversal or any relief from here, it will be from this order block. And if we can sweep this candle low, start pushing a bit higher, maybe even if it's a retracement, bear in mind this is a weekly chart. So if we can even get a sweep and a retracement into this range for a couple of days, that's probably all we need for price to be pushed our way and EU to be a little bit bullish, right? Take a look at the setup, EURUSD, very similar to the DXY. You know, we had that accumulation, we've got that nice range. Now you got that AM, and I'm expecting distribution this way, very similar to the DXY. This type of weekly candle coming from the discount and moving away is filled in this weekly fair value gap. I really don't think we will see it swept, right? Want to see price push higher from here and, you know, expand. I think the sort of confirmation will be right now. If price comes from this current sort of low, it may re-sweep it, but let's assume a swing gets placed somewhere around here, price pushes higher and breaks these little highs or breaks this next sort of, let's say, significant range high, right? This is where we can easily trim the stop loss to this new low. Half the risk is off the table. If price continues higher from that, very soon we'd probably be able to go break even or even, you know, better, hopefully in a little bit of profit. So that's the main sort of thing that I'd be keeping my eyes on. In a different order today, come back to Bitcoin in a second. So S&P, you know, blowing past my expectations. If I'm being honest, I knew I was bullish. We have been bullish, right? We've been stalking this 4-hour market maker buy model for absolutely ages for you guys that watch the weekly outlooks cases. And it's just got a lot of bullish momentum as well. I would say it's got a lot of strength at the moment that's shown, and I don't think it will stop till we've taken this all-time high, especially based on a weekly candle close like this. I don't think there's any reason for price to have a major reversal yet, any sort of major retracement to anything. I think the likelihood is that we are going to push higher. We're going to continue on towards this. It'll be a very similar case on NASDAQ as well. We'll cover it in a second, you guys will see. But yeah, that's literally, I think it's just bullish towards all-time highs. If we take a quick look at NASDAQ futures, yep, mirrored chart, of course, is what you expect with the stock market anyways. But, you know, I believe somebody posts this interesting perspective. 3-month candle, right? If we take a look at this, you know, come into this range, swept a lot of internal candles and this massive move away. When you got a wick place like this, the likelihood is first, we're going to expand towards here. But past that, I would actually expect further expansion higher, right? Even past that, as long as we're closing somewhere up here, we've got a whole month and 13 days left, which is quite a bit. But I would not expect this candle to reverse and us to head towards the low this week. I do think it's just, you know, much more bullish expansion from here, which is great for us. For us to, you know, yeah, NASDAQ is something I would look to potentially position on if we can get something, right? But at the moment, I'll be very honest, there's nothing super clear for us to retrace towards. The week opens and we can get a run on perhaps this consolidation, something like that, start placing a nice swing point. Once we know that swing point is placed and we expect expansion from there, then maybe you can consider something like a buy stop entry. That's why it's, you know, important to be versatile about entries, because it's not every time that you'll be able to get a very clean swing entry, right? Because if I was to mark out the current range, I would go from this low to, let's say, this high. And if we switch to weekly time frame, what's the odds that the next week is going to come and expand into this discount and then head all the way back up there? It's probably unlikely, right? So therefore, what's more likely is that instead, if this week will be expansionary, which we expect it to be, is that price will probably somewhere like this, expand higher, retrace, and then when it gets you the second expansion, somewhere here you enter, another retracement, and then blows higher, and then that's it. Basically your trade setup. You're waiting for that nice swing point to get placed, displacement, and most likely you'd wait for that second leg as confirmation. Once you got that second break higher, now it's like, okay, we'll switch into bullish sort of structure. This is the change in state of delivery. And then you can, you know, hold that trade until whatever you think will get hit in the following week, which may even be the all-time high considering how close we are. Bitcoin. A very similar case to the stock market, right? We are very close to the all-time high, and I don't think there's a massive reason for us to retrace here at the moment. I think, you know, price will necessarily drop or anything crazy like that. Only about 6k away. Look, very similarly, 3-month candle, swept the previous candle, hit a fair value gap, coming from the discount, massive move higher. The next logical spot is that previous candle high, which is the all-time high. I'm down to a daily. I think the likelihood is price will play this daily range. It's not the greatest low to use. We may get a sweep this internal liquidity, run some of these lows at 100k, which would be great. This will be like proper retail liquidity engineering. If we can come towards 100k, now it's, you know, they call it, they flip the level. If we come and tap the 100k, respect it, and as I said, instead of 100k being a resistance, it now become a support. And then from there, I think likelihood is we see higher prices, we see the all-time high, and very similar to the stock market, I'd expect it to blow past really and truly in this scenario. And lastly, we will take a look at potential another swing idea. Right. Definitely potential, not certain yet. We had quite a nice range on the gold daily chart, and prices come into that discount. And from that discount, we've had some sort of wild displacement. For me to entertain the longs here, right? I know a lot of people were speaking about this on Friday, taking this initial OTE. It's not a bad setup in my opinion. You're coming from the discount, it's not bad. But just for extra safety, I would most likely consider price taking this high first. And then we could work with, you know, you could work with either stop loss really. You could work with this, you could work with this. It's your choice which one you want to be more secure, because why choose either? Really and truly, right? I'll be honest with you guys. The invalidation point is this. If I let price come to this high, and that's where I'm entering, right? My stop loss would logically go here. But sometimes you may consider putting it at this low, because now if price does start dropping, you have a bit more time and space to maneuver. What this means is if price reaches here and you think you should close out here on this current setup that I'm showing you, maybe the loss is 0.3%. But if you had the stop loss here, that same loss may be something like 0.5, 6%, right? It's not a major difference, but it just depends on context. Depends on how confident you are. You could hit it either way. I don't think this is a bad setup at all. If we're expecting gold to run back to the all-time highs. I'm not very confident in that at the moment in terms of is gold going to run back to the all-time highs, but at bare minimum, seeing how it's shaping up, how we've got a kick from this discount, I would bet we do get a bit of a bigger move back into this range at the very least. And, you know, if you are in this position, it moves a bit higher, you can go risk off and hold it for that all-time high if we think it's going to be heading there. So yeah, this is something I'm also watching. But yeah, guys, that is it for the weekly outlook. As usual, any questions, anything I can help with, please just drop me a message.